Looks like we're about ready. Good evening, everyone. Hopefully, everyone had a good trading session today, and maybe you walked away profitable. And if not, hopefully you walked away with a lesson. So, I wanted to go through and kind of mark or talk about the pre-market plan that I go through each morning in the Discord. Right, I put this out every morning. At night, sure, you can mark your previous day high and previous day low levels, but I need more data in order to mark my accurate kind of channel where I believe price action will adhere to. So, 1 second. Candace says, has it been more profitable for me than small caps? Most definitely. Yeah. Off of open, just off of, I think 15 minutes, maybe 20 minutes, right? I made 3 grand. So, right, I put this out each morning. Pre-market or previous day low, previous day high. We'll mark a pre-market high, a pre-market low. Okay, so 4 levels that are very important to me, as well as some other daily resistance levels that we had. I also like to mark any ascending or descending kind of trend lines that are formed in pre-market, and also take note of our EMAs. So we see the 200 EMA here is the orange, the purple is VWAP, 20 EMA is the red, and 9 EMA is the green. How many contracts? Really, you only need 10, 20 contracts if you position yourself appropriately. So, and I'll get into that, right? How are you able to do that? So, I also write here, if this supporting trend line, this white one, fails, it might be good for an opportunity for puts. Now, in the pre-market prep, I have to put if and might and if here because there are a lot of new traders, and I don't want people just thinking, hey, Maple said this, so it's going to do this, right? I don't know what's going to happen. I only have some sense of experience as to what these formations are going to do and a probability of what might happen. Okay, so these are all scenarios, and with these scenarios, you need to be able to execute appropriately. So, 1 second. Yep, yeah, this is Thinkorswim. So, moving through, we can see here, I'll clear this chart out as well. Yo, Cohesive, thanks for subbing. Right there, boom. So, we'll go through, I'll just put everything that I have on here, okay, on the chart. So, previous day low, doesn't have to be perfect, okay, no one's perfect, right? Pre-market low, pre-market high, we'll mark these green. Okay, so our pre-market levels are green, previous day levels are going to be purple. Okay, and I'll keep it rather simple. I won't go through and mark the daily resistance levels. I just want the levels that were presented to me very obviously. Yep, exactly, Queen. Exactly. So going through, I've marked my previous day high, previous day low, pre-market high, pre-market low. Now I have a channel. There's this main kind of range here, but the most fresh, the most recent data that I need to be able to trade is this pre-market high and this pre-market low. Okay, now remember we're prior to open, so this is all we see. This is on a 5-minute chart as well. We begin to see this ascending trend line. So what I like to do, mark 1 point, mark 2 points, don't cheat, okay, and extend to the right. Okay, 1 point, 2 point, extend to the right. All right, so we also have this, right? We see that this downtrend break, this is what caused that reversal to the move up. So somewhat respected here. Also, if we zoom out, okay, what is our trend? Let's look on the hourly here, okay? We've broken through this channel, okay? So indecision, a decision is going to be made. It breaks through and it bases, okay? So we see that happen. Now we're in a downtrend. So if we're in a downtrend, we're going to gauge our pivots. Okay, so there was a higher low, higher high. Then we get a big spill off. There's your lower low. There's your lower high. Okay. But in this micro trend here, let's say you're only looking at this. There's your low to base off. Higher high, higher low, higher high, All right, so if we're pushing up here and we're aiming for the next pivot, if we're gonna look to make another higher high, we know that a higher low is gonna have to be somewhat coming in somewhere soon. 1 second. Lebowski says, do you ever find a contract has such high IV that by the time you know the move is done, you haven't made any profit? I haven't had any issues like that. No, not trading QQQ large cap options. Okay, so we have right here stacking, higher low, higher low. All right, higher high, higher high. So there's a trend that's going on here, and I like this channel. So what do? Open hasn't happened. I say that, hey, if we bounce off this pre-market low, then we're going to take calls. Pre-market low is $3.80, or $380, excuse me, sorry. $3.80. So puts, or calls, yo, Noah, thanks for that gifted sub. Calls if we bounce off pre-market low, okay? So I like the first 3 out of the money contracts that are closest to being in the money. So if we're at 380, 381, 382, 383. So 381, 2, and 3. Okay? We'll just leave it simple like that. It's 381, 382, 383. All right, now I say that I will take puts if we reject off this pre-market high. Puts if we reject off pre-market high, right? Same kind of aspect. First 3 contracts out of the money, closest to being in the money. At 385, I'd probably be trading 384. 383, 382. That's totally a 3, right? Okay. Now, why do I do that? Why do I choose those contracts in specifically? Okay, 1, they're obtainable. 381, 382, 383. This is 381. This is 382. This is 383. It's not anything that's crazy, okay, if we were to bounce off this. Same thing up here. 384 is attainable. You have to break under 384, so right there, under 383, right there, and under 382, right here. This is obtainable. This is within the channel, okay? I do this every morning. I post this plan every morning in my Discord, and I even post it in Real Ones or some other Discords, you know, just to help some people out every now and then. And if you go back and look at them and compare it to the day, it's fairly accurate, okay? So also, what do we have down here? Okay, let's look at a larger time frame, this 10-minute. Okay, very clean rounding bottom. If you guys read on that kind of that Twitter thread that I put out, okay, rounding bottom, a point of reversal. So I'll mark this wick, base of this wick here, down to the low. We'll extend it out a day. Okay, maybe a little further. Okay, we extend it out a day. Look at our plans. Look at, I traded this, all right? So we also talk about this trend line if it were to fail in pre-market. You know, this one that has been created here. Why did I mark that? One, it's fairly obvious. It's a basic concept that a lot of people can understand, right? A ascending trend line that fails. But look at what happened on Friday. The same thing. The same thing. Okay? So fool me once, shame on you. Fool me twice, right? It's my fault. So I wasn't going to miss this. So we take puts right on the break of there, okay? Big money. This was about $1,000. I hesitate right here on the tweezer bottom. Sometimes that happens, but as long as I'm able to find the right thesis and follow along, like, hey, I did say I would take calls if I bounce off of that, I add a little bit higher, okay? This is where we get into, you know, adding, you know, just being able to trade and flip that sentiment. Just because you get a big bearish engulfing, it takes out this whole trend. This tweezer bottom, that's all it took, right? Also, why did it bounce there? Pre-market low, support. Previous day high, support. Demand zone, big support, okay? So those are 3 levels of confluence that were able to keep you, or keep the trend alive. And it's relatively low risk. If you add down here, whoops. If you add down here, let's just say you tick right here, okay? If you stop, where's your stop at? The previous day low, most likely. Maybe a little bit of an area under. Okay, you can scale into this. Small scales, bigger scales towards the bottom. A descending kind of scale in, and then a stop out under. Okay, that's your risk. Why will I take these trades all of the time? Because there's a defined risk. You shouldn't be taking any trade unless you have a defined risk or stop loss. Okay, so moving forward here, we get a nice pullback out of this. Normally on a bullish trend or any kind of trend, you want the first two pullbacks. In hindsight here, there's one pullback here and two. Okay, but throughout the day, this is pretty choppy. Okay, this is fairly choppy. And how can you trade this chop? You have to have a very strong understanding of VPA, volume price analysis. Really, it's just your understanding of candlesticks. Okay, I don't really watch the volume too much. I did note that it did kind of drop off a little bit, but I don't watch the volume too much. Really, I'm for myself, I'm very kind of analytical and have a great understanding when it comes to reading candles. Okay, so right here, indecision candle. This is a doji. We don't know. It's tug of war. It could go either way, right? You could flip a coin. But what does it have for it? Tweezer bottom. Pretty large rejection candle there. That's a 3-bar play. Okay, on the 10-minute. You know, what's a 3-bar play, right? You mark the high, you mark the low. If the high breaks, it's a buy signal. If the low breaks, it's a sell signal. What happens here? Buyers step in under VWAP. There's another signal right there. Some sense of a bullish sentiment. Okay, no candles closing under VWAP, even on this candle that rips up. Look at this lower wick here. What happens when we come back and we pull back down? Right? Look at all the candles under VWAP again. So I feel like a lot of traders that were red on a day like today were fighting the trend, trying to pinpoint that reversal. They had seen a bunch of red and blood in the market the last few weeks, but due to kind of, I mean, the extreme, you know, just the extreme of the sell-off, there had to be a pullback at some point, right? A bounce. There needs to be some sense of a, you know, short covering. And buyers are naturally going to come in and buy the dip, especially on a tech stock or, you know, tech stocks or index or anything like that across the board. So now we have a trend going on here. You can say inverse head and shoulders. You can see that all of the majority of the pressure here is on the buy side. Okay, we're over VWAP. We're spending more time over VWAP, right? We're not spending very much time under VWAP, and when we do, you see large lower wicks. Okay, these are buyers present. So gauge your trend. Draw some trend lines. Okay, if you're confused by candlesticks, if you're confused by VPA, the indicators, supply and demand, all of it, okay, this is the easiest thing you can do. The easiest, right? And I'm not saying like this is just, I'm gonna draw a line. Okay, I'm gonna draw a line. I'm gonna give you entry. A lot of you probably already see this, right? So, 2 lines, 2 entries. You don't have to trade this chop. You can avoid all of this. You can avoid all of this. All you do is enter on the downtrend break, keep your stop, about break even. Now, when you're trading a downtrend break, you want it to break, right? You want it to break out. If it doesn't break out, it's not a true downtrend break. Why are you in that trade? You entered that trade to be inside of a downtrend break, right? A downtrend breakout. If that doesn't happen, that's not following your plan. You don't want to be in there. Okay, you're going to take on an unnecessary loss. Now, also, it also comes down to impatience. Traders coming into the market and maybe they see some opportunities like, oh, I missed this. Oh, I missed this. I missed this big green bar. Now they feel like in this chop that they have to be into the trade. In hindsight, you can look back and say, hey, you know, it's 50-50. You could take a long, okay, or you can take a short. But people get caught. I mean, this is on the 10 minute, so it looks fairly simple here, right? People trade on the 1 minute. I trade on the 1 minute too. Don't get me wrong. There's nothing wrong with the 1 minute, but it does have a lot of data presented to traders, especially if you're new. That's not always the best thing. So, right, you get caught in this bouncing chop up and down, okay, flips up, flips down, flips up, flips down, okay. It's very difficult to trade something like this if you don't have a clear understanding of price action or kind of developing a trend. So one of my biggest rules on trading options, large cap options, is not fighting the trend here, right? So Just draw a trend line. 0.1, 0.2, boom, extend to the right. Okay. Look at how that adhered to that all day. You guys see this? Very clear. So on open, with the plans that I provided in the Discord, let me maximize this. The plans that I provided in the Discord, right? They were fairly simple to follow along. And you guys will notice if you've watched the last 4 or 5 live sessions, or I forgot, I think it was 4. If you guys have watched along, right, my system, my strategy does not change very much. Why do I need to change it if I have found my niche in the market and I can capitalize upon this every day? Okay, it's fairly simple. Support, resistance, trend lines, downtrend breaks, ascending trend lines, right, head and shoulders, channels, okay, you name it. All right, so off of open, we get this clean break. You could have said, okay, this was rejecting off open and gotten a little bit early, but the confirmation here was this downtrend break, okay? Now we know that the demand is down here, and we talked about taking calls. So if we're talking about taking calls here, okay, I'm scaling. We don't have to hold. The problem with traders is that they hold for, you know, something like that, where there's no confirmation. Okay, they hold for a large range bar that's never going to come. Why does it never come? Because they're not reading VPA. They're not seeing that how strong of an area this is. Pre-market low, demand, previous day low. This is, you need an insane amount of selling pressure. You need bad news. I didn't see any Fed talks today or Biden scheduled to talk or anything until like 2 or 3 o'clock later in the day. Okay, so there wasn't anything that was majorly going on, as well as I don't feel like a lot of people are really that scared of you know, the Omicron variant that's been kind of you know, brought up in the news. Yep, exactly. So on this plan here, fairly simple. A lot of new members that join the room were able to follow along to this. I do this every morning. Okay, let's look at some of their results. Okay, this is just from the morning, and then we'll continue. Okay, today 1016, 2%. So this is 45 minutes. Okay, 1016, right here. Look, everyone making money because we're identifying the trend. They either took calls on the bottom or on this, you know, where buyers were coming through here, right? I also noted, well, we'll leave that. I also noted this. Now, this may have seemed bearish, okay? But yes, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. But if it's truly bearish, why are there all these lower wicks? Okay, I kept saying that in the stream. I was like, okay, you know, this looks bearish, but I don't like where buyers keep stepping in. So, you know, if you had any puts here, we cut them, we flip long just because we see the base of VWAP. Also, you know, this confirmation here on that downtrend break. So look, 45 minutes after open, 2% on the account, 40% scalp. Renus makes $2,300. 1018. Look at this. 383 calls. I think they went a little bit out of the money. Nope. Calls. 381, 382, 383. What time does he buy them? 9:31. So right off open. Okay, look at that. 185 to 386. Do 185 times 2, it's 370. It's a 100% move in, looks like 6 minutes. Okay, Acel traded, made $1,000, 50 minutes after open. Nice guy made 90% on his first ever contract purchase. Okay, so transitioning from small caps. Wild made $150, about an hour after open. J Huge made $469. B-Roll Crafty, $831. 102. This is only an hour after open, guys. Okay. All following the very simple plan that was provided here. Okay. 4% on the account. 500 on his day. Nice buying and selling going on here. Look, this is a newer trader, right? If you're one contract at a time, yeah, they take a tag here, but you make it up through proper analysis. Okay, one thing as well that goes through newer traders is that they have to make an insane amount of money starting off, but you're learning. There's no reason to rush the process that goes along with learning. It's better to take good trades, and take trades to make a good trade rather than to take trades in order to make money. 4% on the account. 4% on the account, 22 bucks. 2.4% on the day on their account, 100% on a Qqq contract, 7% on the account, and $176 or $167 green. Okay, so this is all fairly simple. There's no crazy kind of call. It's all focusing on Qqq every day. You know, getting that personality and understanding the personality so that, hey, when I come to the Qs, I know how it likes to move. I know the spread of the contracts. I know that, hey, it likes to choose a range. Okay. Let me catch up on the chat a little bit. Yep, exactly. Exactly. No reason to fix anything that's not broken. So when we get through this channel, normally, let me go to a previous day. Friday's perfect. Okay, so pre-market low, pre-market high. Okay, we'll just leave them how they are. Now, when we get to this area where, you know, it's not going to bounce on the normally I say, hey, calls if we bounce off the pre-market low, puts if we bounce off the pre-market high, right? Now, if we get to an area where price is descending rather quickly, or we either break the low of day, this is where we start to see a very strong reaction. Okay, that's where the markets become imbalanced. So, you know, kind of consolidating in this channel here, that's somewhat balanced, moving sideways. We didn't break out of this channel. We didn't, you know, become imbalanced until about right here, 1250, when the high day break occurred. Okay, so overall, you know, yes, you could have set a trend and waited for the high day break and made a nice scalp, but how are you going to be able to get into these trades rather early? Okay, so like I said, look at your downtrend breaks, watch who's buying and who's selling over or under VWAP. Okay, draw your trend lines. It may seem very primitive or just very kind of, you know, not anything very flashy. Okay, like, oh, you just drew a trend line? Really? You just place, you know, $3,000 or $4,000 your capital because you drew a line, right? It sounds crazy, but all right. I took this on stream with Ion. If you guys were watching, okay, we took 1 second. We saw this. We marked this point to this point, okay, or this point. Let me just remove it because I think it changed on the time frame. So I'll mark from this low to this low. So here to here, okay? And we're going to extend it to the right. So price had popped up, but I was expecting price to bounce here, all right? So we just take a call here. We just take 385 calls, to be exact. Why do I take the 385 calls? Okay, if we're at 383, 385 would be in the middle of that 1 to 3 contracts that are out of the money that would be obtainable. Also, that's the pre-market high break. So I'm aiming, hey, we're moving up. I see that the trend is bullish because we get low, higher low, another potential higher low over VWAP. Right, so I see that this pre-market high here is obtainable, 385. So we take the 385 calls. I take them at about 68 cents. Okay, right there, boom. And Ion and I talk about it, and, you know, we're like, okay, well, honestly, it could go either way. Yeah, it could start to reverse. I see that there's a lower high here, but that creates a downtrend break. We have this ascending kind of trend line. Also, if we look from a VPA perspective, okay, the most recent pivot here, the most recent wick, that was my risk. The low of this wick right there, that's where I would have stopped out. Maybe you could have held it a little tighter under that trend line there, but right there, this previous low, the most recent low, right? If it comes back down to here, that's my stop, okay? What does it align with? It aligns with VWAP. Now, yes, you know, buyers may step in under VWAP, this or that, right? But for me, the trade was, for my plan for the trade was, it's going to hold this trend line or I don't want it, okay? Also, you can see here over VWAP, we have the 9 and the 20 EMA, no candles closing beneath the 9 on the 10-minute, very strong kind of action there. Okay, so we take it at 68 cents. It pushes up, puts us in the money here, so we scale a little bit. Okay, so what is this time? 12.50. So from the 68 cents here to 12.50, 1 second. Right there, right? That's 88%. All right. So we take it from here, 1150, 1250, 1 hour, 88%. I still hold on because I say, remember, we've gone through this previous day low that broke. Now, if the high of day breaks, it's the same. It's going to choose a direction. If the high of day breaks or if the low day breaks, normally you see a break in base or some sense of continuation because the trend is now truly chosen a side. Now, it's not always going to stick to that side that it's chosen, but it's something to be aware of. So moving forward, right? 1150, 1250, 88%. Okay, and it keeps grinding up. There's no reason. A lot of people are like, hey, Maple, how can I hold on to a trade, right? I paper hand my trades. I let go of them too quickly. I love the 9 and the 20 EMA. I absolutely love them. You can also use a kind of trend line. But look at this. We mark that trend line here, right? 0.1, 0.2, extend to the right. Okay, look at the 9 EMA. Remember how I told you guys how you can trade this? Each time it taps the 9 EMA fairly early on onto the trend. Okay, if it breaks above this, it's a little bit later. That's why we see all of these kind of dojis and indecisive candles there. Okay, but earlier on to the trend, right, where it clearly breaks and bases, and we see buyers step in under this 20 EMA, it holds it. So 9 EMA tap, boom. This is just gauging the strength of the trend. So yes, I am a naked trader. Just kind of naturally. Okay, that's just how I could understand price action and wrap it around my head. So I draw trend lines, support, resistance, supply and demand zones, etc. Okay, but these indicators, this ties it all together, guys. Okay, these are like the shoelaces for my technical analysis. This keeps them, keeps me grounded and keeps me on my, just on top of everything. Why is this also important? It provides another perspective that people can, other traders base large amounts of money or large sums of trades just on these indicators, okay? HFTs, algorithms as well. But how can you hold on to a trade, right? You're a retail trader, you're sitting at home, right, in your PJ or something, right? You're just a regular person, right? How can you hold on to this trade? Because I ended up selling this for about 230%, okay? So taking 68 entries. They go, I think, 290% at the very high of day. I'm all out about 230 up here. So 230% for a couple hours of my time, taking $70 and turning one contract into $243, $230. Okay. So what is that? You're profiting about $170, $160 a contract. Okay, that's a lot of money for for one contract. Okay. So moving forward, how do you stay into this trade? Just gauge either your trend line or your EMAs. Okay. Plot these on. It's a 9 and the 20 exponential moving average. Look at this. Oh, the 9's there supporting me. I'm going to stay in. There's no reason to sell. Oh, I see buyer step in once again on the 9. No reason to sell. Oh, buyer stepping in again. No reason to sell, but VPA begins to kind of top out. And where does the spell off happen exactly? Right when price breaks below the 9 EMA and this major trend line. Okay. Don't paper hand your trades. A lot of you guys, especially newer traders, I've done it plenty of times myself, right? We tend to hold on to losers and cut winners relatively quickly. Okay, why is that? Okay, it's the fear of being wrong. Okay, if I'm in a trade and I'm down X amount of dollars, I don't want to be able to admit my fault in the trade. Okay, but if I'm right, it's a scare, it's like, oh my God, I'm right. There's a little bit of money in my account that wasn't there 10 minutes ago. I'm going to instantly lock it in. Okay. What if you take a perfect breakout entry right there and you sell it all right there? Okay. You sell it all right here. Let's say you sell it all right on the high day break. Okay. What happens? Then you're FOMOing. Then you're looking like, oh my God, I messed up my trade. I need to enter back into this. I actually had a member that kind of experienced this today, right? So when it rips up, people will take calls, okay? They'll take calls, they'll get off beat, they'll get off tempo, okay? And then when it pulls back down, they'll exit their calls. So then you take a tag, and then it rips in front of you, and then you do it again, and then it pulls back, and then you take a tag, and then it rips again, and then you take calls, and then so so on and so forth. Okay, it just is a never-ending cycle of unnecessary losses that's very easily preventable if you can kind of develop patience in your entries, really gauging the chart, looking at multiple areas of confirmation that, you know, hey, I can base my trade off of this risk here. If I can base this trade off of this level, that's going to provide me relatively low risk, maybe 10, maybe 15%, depending on the trade, then that's a good area, right? That we can, because if I'm only taking a tag of 10 to 15%, right? We took entries down here. If I'm only taking a tag of 10 to 15% in this area and I make 230%, what's the risk to reward then, right? 1 to 23. Small caps are getting 1 to 3, 1 to 2, maybe 1 to 4, maybe 1 to 5 on a good day, 1 to 23, and I don't take a loss. Okay, so you guys, you know, really kind of piece that together. A lot of members were able to, you know, follow along relatively closely, but the biggest problems that I saw traders having in these areas, chop areas, okay? If you're not well versed enough, you don't have enough experience, just paper trade these or keep note of them and wait for what's going to happen. Okay, this consolidation is all prior to an event, to something that's going to happen in the market. Okay, so this consolidation here, boom, downtrend break occurs, you make your money. Downtrend break occurs, you take entry, you make your money. Okay, so it's fairly simple here. Really, traders like to overcomplicate things when everything in front of you is readily available to make the right decision and in order for you to be a profitable trader. Let me catch up on the chat a little bit. Ruff says problem I have is a red candle will be a touch below the 9 EMA with 1 minute to close, and I get freaked out that it's going to break and sell. So you have to look, if you're using your EMAs, you have to look on multiple time frames. So I'm always looking at the 1. The 1 is a very good indicator or time frame for the indicators to kind of gauge the strength of the trend, but it is a little bit too, it kind of hugs it a little too much sometimes. Now on a very clean breakout, it's different, right? Something like this, okay? And then when you start to see weakness, obviously you could kind of see that through the price action as well. But on the 1 minute here, right, we see that the 9 and the 20 break, or the price action breaks below the 9 and the 20. Okay, normally what you should look at is your next time frame. So either you look at the 3 or you look at the 5. Okay, let's just mark some arrows here where maybe some 1 minute traders would have got stopped out. Okay, so when it breaks below. All right, look at these though. These red candles, this is why the 1 minute is good in certain instances, but it's not perfect. You have to be able to breach away and look at multiple or larger time frames. And here, right, it pushes below your EMA. So instantly, I look over to the 5 because I have the 1, the 5, the 1 hour, and the 1 day normally, or this is my contract kind of chart. Perfect EMA tap. Look at that. Perfect touch right there. Perfect touch. You would have been like, oh, wow, buyers really stepped in right there. That's a hammer candle. On this, you're like, oh my God, it's the time of reversal. It's going to die. Okay, so there's too much data here that really spooks people out. So nice hammer candle there. Right here even, it breaks below. Not on the 5. It maintains that 9 EMA very well. So just look at your multiple time frames. Don't stick to just one. Don't stick to the 1 minute. If you really are having trouble moving away from the 1 minute, just delete it entirely and trade. Just try to trade strictly off the 5. That's something that I did when I had a hard time trying to learn the the 5 minute or the 10 minute. I just had to delete the 1 minute entirely and focus and learn completely different candlesticks. So let me catch up. Let me see if you guys have any questions. I also took some notes. Let me review those as well. Oh, okay. This happened quite a bit today. So you guys may have seen me mention some 3-bar plays in the chat today. I'll leave that one. Okay, so some 3-bar plays, right? All right, let me find them where they were. What happened? I think I was looking at the 10-minute. No, I think I'm looking back. Okay, yeah, I set them on the 5. So right here, my channel ready. So here's a 3-bar play. Now this is a little tricky. On a day that's very choppy, normally you should be sized down and you should be scalping. You should be taking quicker profit, right? I take puts on here. So this 3-bar play, you have a large range bar that pushes up, or if it pushes down to either direction, and you mark the first candle that comes after. Typically, if it holds the 50% retracement of this candle, I'll mark the high and the low. Now, what this kind of dictates is that if it breaks below, that's a sell cut or short signal, okay? And if it breaks above, that's a buy signal. Now, in this, we kind of see that it has a descending channel. I take puts up here on a pop up. And then once it breaks through, this is where I'm scaling, okay? Because some people will shove down on this kind of 3-bar play kind of signal, but I want to be in there preemptively and getting out of those puts because we can see here that it does. I knew that this was a very clear kind of downtrend break, and buyers kept stepping up under VWAP. Another 3-bar play right here, okay? Range green candle, you mark the high. You can mark this low, or you can mark this bottom wick right there. Normally you don't want a candle to close below, but there's a little range here and it pops up above and it closes. So you have an option if you want to scalp this, right? You want to take some money, right? Price at 382.81. Let's say you take calls here, 382.81, 383.81, okay? And almost this is 384.30. So almost a 1.5 point move, almost 2 point move there. And on some calls, you know, depending on how far out of the money you would have made, this is probably a 20, 30, maybe 40% move. Another 3-bar play. Okay, large range green bar holds 50% retracement of the previous bar. We see some consolidation. We get a nice candle that closes above. We see this trend line supporting us and the 90 MA. So we know that it's going to try to push up. So there's multiple levels of confirmation there that we can take an entry and look at, right? Where's the stop? What a 3-bar play really kind of provides you is a stop and an entry. So you can kind of enter on the low of the push and stop out if it breaks below. And, you know, you can try to sell here at the top and with a relatively tight and low risk if you stop out if it breaks above. So right here we see break, maintains this support, nothing closes below this candle there, and it continues. What's another one? I think I had one more in here. This is one right here to the downside. So a 3-bar play to the downside. Mark this channel here, channel low. Now you see that it pops below. I always give wiggle room on most of my stops, right? If I'm looking for a point of reversal, I can see that these wicks here under VWAP, pretty much a bullish kind of signal for me. But it breaks through here, right? But it wicks back up. So you can take calls with this kind of tight stop. Maybe you move your stop down to this low down there because it's where it pushed down, and then it shoves up. Okay, remember on a day like this, it was kind of tricky to trade if you weren't, you know, noticing a larger picture trend, or right, you're just not that great of a scalper. Not everyone is destined to be a scalper or even enjoy scalping. So I do understand that for the first kind of 3 hours of the day, it was somewhat difficult, but you're gonna have to learn how to trade these days, right? You don't have to trade scalp days, but I mean, at some point, it's a skill set that you're going to want to learn in order to be able to be profitable in any kind of market environment. Brenda says, Maple, since you moved to options, have you changed anything about your journaling process? Just asking because I typically use the TOS monitor tab to average my entries and exits. And for Qqq, I have a bunch of different contracts that I need to journal because of all of the different strikes I've been trading. So what I do live, I have my notebook next to me all the time, and I'll write down, like right here it says alpha open 383 puts. I took it at $2.28. I scaled out at $2.85, $4, and then I scaled out at $4.56. So I'm just jotting that down. It looks like chicken scratch, so I'm not going to share it. But I have like 384 calls I traded, 385 calls, 381 puts. Okay, so I just have to go through and manually write down and journal all of my kind of contracts that I trade. And you can go through back on TOS or whatever kind of platform you use and kind of chart these out, right? Noting your entries and exits and where they were in relevance to other buyers in the market or other sellers in the market on your options chain or contract. For stop loss with a 5-minute bars, do you wait on the candles to close on the Qs or just cut as soon as the candle moves below the stop loss? I normally wait for it to close, but if I see a large kind of reaction, so a big bearish reaction, then I will just kind of cut. It's really contextual. You'll learn through experience how to gauge these kinds of bars because, like just like I had here, okay? If you're a buyer right there and it wicks down below, but you keep seeing these bars wick up here, and you see this bar wick up, okay, you're probably not going to be too scared. You will be like, hey, I have my mouse on the flatten button here very closely, but I'm not seeing a large kind of bearish engulfing candle, and I'm not seeing this trend line break. So this trend line wasn't broken. Buyer stepping in here under VWAP. So that kind of would have been able to help you stay into the trade. Do I play the 20 EMA and the 200 EMA crosses? If so, what time frame are you typically watching for them to cross or on before taking a position? So I normally am looking at them at the on the 5-minute. So let me plot it on here. I have to do this every day. I need to fix my workspace. Okay, 200 EMA. It's the orange line here. Now, look at the red line, right? The 20. Where does it cross? It crosses right here where I take my entry. Now, when the 20 EMA crosses on the 5-minute, when it crosses the 200, that's typically a very strong reaction and a very strong buy signal. Now, if it crosses down, obviously that would be a short sell signal. But we see here, I know I have a lot of trend lines here. Let me clear your own set. Okay, we can see this red line crossing over the 20 or crossing over the 200 right there. So the 20 EMA on the 5-minute crosses over the 200 right there. And what happens? What if you don't trade any of this and you just wait for this reaction here? Look at that move. And how easy of a move. It's not this chop, that's really annoying to trade. Gains in your account, gains out of your account, gains in your account, right? This is set and forget. You take entry. Oh, the 9 EMA is being supported. I'm going to keep holding. 9 EMA keeps being supported. I'm going to keep holding. Oh, I start to see some upper wicks here. I'm going to start to sell, right? Then you're selling majority out before this kind of nasty reaction there. When taking those scalps, are you buying the closest price? I'm probably trading the 2 or 3 out of the money contracts. But closest to the price, it's going to follow the underlying much better. But if you are scalping, right, I just showed you a scalp that went, 1.5 points, almost 2 points. So it's relatively close to the underlying, so it will follow it relatively well. And you'll be able to make some money. Now, if you're trading like down here 382s and you're trading like 387 calls or 388 calls, that's really far out of the money. I wouldn't use that for a scalp. The first 3 out of the money are typically a pretty safe bet for you. Another instance for that 200 EMA or 20 and 200 EMA cross right here. Look at Friday. 20 EMA crosses right there. The 200. That would be right here on price action. If you just sell a put there, maybe you don't even take full size. You just kind of put a feeler in, a little kind of entry, some skin in the game. Okay, you take a put there. Look at the reaction. Take a put right there. Okay, big move down. Let's look at it on another day. Okay, right here it crosses. It's a little bit late though. Okay, so this is an instance where you can't trade the same EMA or the same strategy or some kind of thing every single time. It's not going to work every time. Okay, because what was here? There was multiple levels for you to get in. 3-bar play there, VWAP breaking base, 9 and 20 EMA holding up. If you wait, right, indicators are they're laggard. So if you wait for this confirmation and you take an entry right there and it's a high, if you're taking a call on a higher high, I kind of feel bad for you because that's not how it works. Okay, if you guys saw from the pre-market prep plan, okay, what was I doing? Doing the inverse, taking calls when it's shoving down, possible puts if it's shoving up. Okay. Hi Maple, do you have your TOS workspace in your Discord? I would like to keep your workspace to keep it consistent while learning. And what is your time frame? I just give it to you guys. Doesn't matter. There you go. Can you do all of your entry based on the 9 and 20 EMA on the 5-minute? Technically you can, but it's best to look at multiple time frames. So I look at 10-minute, 15-minute, 30-minute, 1 hour. You have to really gauge the trend. If you looked here from today, look at after open. So yes, there's all this chop. Okay. Yeah. Oh my God, this 5-minute is so noisy. But you're going to gain much more information. Let me clear this. You're going to gain much more information from the larger time frames because it's less noise. This is a lot of bars here. But if you looked at the 1 hour, even glanced at it, you would have seen huge amount of buyers stepping in, huge amount of buyers stepping in, huge amount of buyers stepping in, overtaking the supply, right? Look at what happened. Break and base on that supply. Now, this isn't after hours, but you would have seen the bullish sentiment that was occurring here. Okay, you could even have drawn this kind of trend line. Get off your smaller time frames if that's the only thing you use. Really, you have to be versatile in the markets, and you must be able to look at why is it important? Okay, ask yourself random questions all the time to push yourself a little bit further. Why is it important to look at multiple time frames? 1, it's less noise. 2, it's going to give you a stronger kind of confirmation of the data that's presented to you. Also, it gives you more perspectives of what other traders are looking at. If you're just a trader that only trades one way, that's fine. You have to have at least understanding of how other traders are trading alongside you. Not every trader is trading the same way that you do. So that's why I have VWAP. Institutions use this. The 200, the 20, the 9 EMA. Strong options traders use this, as well as institutions and algorithms. Okay. I use naked charts, so writing or drawing support, resistance, supply, demand, noting my pivots, higher highs, higher lows, lower highs, lower lows, gauging the micro trends. Okay, trading formations, bull flags, pennants, yada yada. You have to understand that there are other participants, participants in the market, and all that we're doing trading. I'm just trying to read the other trader's mind. Okay. I'm just trying to understand their body language and trade alongside them for these large kind of gains that are possible every single day. I told you guys, since I have began my options journey, I've made 100%er every single day. Every single day I've made 100% a winner, and there hasn't been a day without it because it's that common. Okay, a base hit is really like 30, 40, 50%. Okay, the really fun ones, 150, 200, right? We got one today, that 385 call I took down here at 68 cents. That was, that was 230% winner right there. Right, and this was, let me see. What did I say that at? Taking 385 for a scalp, 1154. 1150, this area right there. Okay, so you see this highlighted, low risk on supporting trend line, no candles close below it, like we talked about. Tight stop, always a tight stop. Why would I take an unnecessary loss? To prove myself that, hey, like, hey, I'm not wrong, right? That sounds crazy. These went 230%, and then even more. Curious, what is your average gain over the course of a month? For percentage wise, probably 80-90% on average. Now there are the anomalies that go on further, but consistently about 80-90%, I'd say. How often do you look at VIX to determine if you enter a trade or not? Do you just keep an eye on it based on your trade off both VIX's setup and QQQs? So right here, all I did, drawing downtrend breaks on VIX. Every time I had a downtrend break, it did it. Downtrend break, rip up. You could have, prepared yourself for this kind of move. Downtrend break again, rip up. You can see it here once more. Downtrend break, rip up. Okay, just prepare yourself. You have to watch VIX if you're trading large cap options. I also watch NQ and SPY very closely. Do I record all of your trades for people to see? Normally they're on Twitch, but once we keep it in the Discord, I will just, and when it's on YouTube, I should be able to stream that. I think I did it this morning at like 10 o'clock. I had no clue that you could privately live stream on YouTube, so it won't be ready for me until about 10 o'clock tomorrow. So we'll do the live session, try to move it over there tomorrow. But yeah, everything's recorded and available for everyone. Do I record all your trades for people to see? I live stream every day, 8 a.m. to about 12 or 1 o'clock every single day, laying it all out in front of you. You're going to be able to listen to my kind of thesis and thought process and follow along the trades. Oh, because no one believes in 100% day? I mean, guys, those are in the house of stacks. Come on. I mean, guys. I mean, this is just from today. Okay, this is just from today. 231%. This is a member. 100%. This is on their account. Okay? Yes, there's some losses in here. People go through losses. 5% on the account, 1% on the account, right? 53%, 258, 10%, 92%, 385%. This was one of my largest winners there. 60. These are members, okay? 44% on their account right there. So I mean, guys, the work in options. I mean, how could you not believe it? Yeah, first day traders making 90% exactly. How could you not believe it, right? Watch all the Twitch live streams. So, yeah, exactly. I mean, what happened on small caps today? I know that we had some runners. Was it LGVN that was moving? %40 from top to bottom. So I know that no one's getting top to bottom. So let's say the meat of the move, 20%. I mean, I guess I understand your perspective of like, a trader not making 100% because in small caps you're only ranging 20 to 30% on average. So, let's see here. Let me finish up a few more notes. Okay, I wanted to talk about wick pivot. So how can we gauge when the price is about to reverse? So I always mention that, hey, fortunes are lost every single day trying to pinpoint pivots, right? Trying to pinpoint bottoms or reversals. But that doesn't mean that you can't try to, backed with proper VPA. Okay, so what is that? This is I was like, oh, that's a tweezer bottom. This is a huge sign of reversal. That's just your bottom wick pivot. Oh, look at this. No candles closing over this level, right? Just getting shaved off. This is if no candles can close above that and we get a lower low, we're most likely going to reverse. Okay, these are your wick pivots. You can pinpoint bottoms, but only if you have the supporting VPA behind it, right? If it's just ripping up and ripping up, why look at puts? Okay, why look at puts? Unless you see some very clear VPA. Okay, you see all these lower wicks here? Lower wick pivots, shoves up. Look at these lower wicks. VPA. Why not pinpoint bottoms if you have the strength behind it to analyze and say, hey, I'm confident in this because of the lower or the buyer stepped in and I want to trade alongside with them. Moves up. Look even right here. No buyers, letting it close below the 200 EMA. Okay, so why can't you pinpoint bottoms unless, you know, you're looking at it and you're just like, it's shooting up, so I want to take puts. Okay, that's an awful thesis. So, you know, guys, there's plenty of opportunities. Tomorrow, I expect a little bit of cleaner price action. I don't think that it'll kind of chop around so much, but if it does chop around, I will be prepared. And when you are trading the chop, just kind of size down. There's nothing crazy that you should be doing. You shouldn't be trying to make your day throughout the chop. Your day is easily made, most likely on the high a day or the low a day break. And what happened here? A break and a base and large continuation. Yep. Also, yes, you guys are asking about the Discord. 1 second. All right. 1 second here. All right, so yes, I do have a Patreon. It is an educational kind of discussion community that we go through, and every night, just about every night, probably 3 to 5. This last week I had 6 live sessions. We do live sessions just like this. I dig a little deeper on some other things. Tonight's review was kind of just going over the day and the chop, but we go through. Also pull up the Discord as well. Whoopsie. Every morning I start pre-market prep at 8 a.m. A lot of Discords will do pre-market prep for about 30 minutes or so. I stay on stream with you for about 5 hours each day. I start at 8 a.m. But here I make majority of the callouts. We'll talk about, look at these formations. Qqq struggling in supply, right? This downtrend break. Look at what happens in the downtrend break. We mark a 3-bar play. I walk you guys through these things. Stacks chat. If you guys have viewed this before, a few live streams, right? This is where a lot of the trading goes on, and just kind of trading discussion. And people talk about regular things as well. Lots of educational kind of discussion as well as material, right? We have tons of material in the options kind of section here. Plenty of things to get you caught up on, as well as swing ideas, chart review, right? We go through. I've been pounding out these chart reviews, right? I write about a paragraph each, going over through like, what you may have done wrong or what you can kind of improve upon on your charts. I've seen great improvement through the members, just especially the ones who have been pounding away at the chart review channel and posting charts. I see today I have a few more to get through that were fresh today, and I will get through those tonight. But just kind of giving you my analysis and how you can improve. Questions, any kind of questions that you guys have, our mods and myself answer them. I'm very appreciative of the mods. Profits and percents channel, right? We went through. This is where everyone posts their kind of daily gains and shows, profitability through hard work and determination. Okay. I mean, look, even like right here, right? This guy just joined the room. Look, first day in the group and 1 contract, paid for the mentorship. Okay. 1 contract today for me. I mean, most of my contracts probably paid $80 to $200 a contract. And Liquidity Lion made 7%. Jesse the Ripper made $167, right? So moving through runners of the week, Minnesota Tom. I don't want that link to be displayed, but he goes through the small cap kind of runners of the week, and those are kind of maintained in his Excel sheet that he has. And I'm very appreciative of the fact that he does that and keeps up with it. Problems trading. As we all know, as traders fairly early on, or just in general, most of our problems are fairly similar. I'll come in here as well as some other traders, and we'll talk through our problems and understand kind of key points and share key points on how to get over them. because it is something very common that we all kind of go through, and the solution to them is fairly simple as well. Let's see, options earning plays. This is where we talk Dark Mike and Maybed, or Optimus Grind. They've been posting their options play or earnings kind of whispers and things to look out for, which has been awesome. Homework channel. This was a great turnout for the homework channel, or for the homework assignment this last week. Right, I had one on December 4th. All I talked about was welcome all new members and OGs. Had a great start to December. I'm very optimistic for the remainder of the month. I would like you all to write down what major problem you are experiencing in regards to trading and how you plan to work towards overcoming them. I also would like you to write down what your strengths are and how you intend to improve them. Many times traders only focus on the negative but fail to see that they actually have some pretty strong trading methods. So one good, one bad. I highly encourage you to participate in this assignment and post it in the homework channel. Okay, so great turnout, right? If I go back to the base of December 4th, right? Yeah. One thing that I've noticed that's been going on with the members that are very, that stay active within the group, they seem to have the most stride in their progress, right? So these homework assignments, some people may scoff at them or they just may not even look at them. This is where you're digging into yourself, digging into that psychological aspect that may be holding you back from obtaining a lot of the profit and pushing yourself towards becoming an independent trader. So very nice to see all of these. I'm still reading through a lot of them, but as you can see, tons of work being done in our Discord. It's not just call outs, right? If you want call outs, I don't really care to teach you, right? Because that's not what it's about. The whole Discord is about teaching you to be able to become independent at some point, right? And teaching you guys how to fish and how to consistently fish. It's not just like, one trick pony. Like, if I can come to the market and display in front of you 5 hours a day that, hey, you can make your living off of 5 hours a day. Okay, if I can do it live streaming every single thing that I'm doing, every single thing that I'm saying, all the thought process that goes through my head, right? It's possible for you. If I can do it, you can do it. And the idea behind the Discord is to create that step and that foundation towards that consistency and that trust in yourself, the confidence. Okay. Live sessions. We've been killing the live sessions. 1 second. Oh, okay. There we go. So yeah. Also, Donuts has been posting a lot of the live sessions from the Twitch and uploading the YouTube, but tons of, these are all about an hour long, so you got about 50 plus hours of review content. Pretty much everything you need to learn how to trade options and day trade options, right? That's my kind of main niche and focus, is day trading these options and being able to make my money day in, day out, get a good night's rest because I don't have any swings. I will swing every now and then, but really focusing on hammering out Qs or anything else large cap. 1 second. Tons of books, right? Strategies that we go through. These files, if you're new, you have to request these files in order to for me to accept that, right? Supply and demand, also a course on supply and demand. I've also made plenty of videos on supply and demand as well. So and then if you do join, right, please start at the Start Here channel. I know that seems pretty simple, but for the most part, it's going to help you navigate through the Discord and give you a much easier time moving on. So, guys, I will take a few questions. If you guys have any questions in regards to trading or anything else, and, then we'll wrap it up in a few. Yeah, exactly, Ace. Think about the trader that's just a call out trader, where they're going to be in 5 years, right? And think about the trader that's pounding out charts every night, refining their rules, working towards that confidence and inconsistency, right? And where are they going to be in 5 years compared to that call out trader who just buys call outs, or maybe they're you know, in AJ's room waiting for call outs or this or that, right? It's very, very simplistic, okay? Do you want to make money for yourself, or do you want to wait and ride someone's coattails? Why Qqq and not Spy? So Spy moves well. I enjoy trading Qqq because of the way that the contracts move, as well as the spread of the contracts and the holdings that are in there. So you have Tesla, Facebook, Apple, Netflix, Honeywell, Amazon, PepsiCo, Microsoft, Google, Adobe, Nvidia, AMD, Moderna, and a bunch of others. But really Apple and Tesla, those two that really stick out, and aren't really going anywhere for the time being. That's why I really enjoy trading Qqq. You can trade SPY the same way. SPY is pretty similar for the movement. And it looks pretty clean here as well. But right, there's still that chop. There's still that chop that you're going to experience. So it doesn't matter. That's one of the most common questions that I get, like why Qqq and not SPY? I mean, why not? You know, why does it matter? Today I traded the 0 DTEs on Qqq. And I'm normally trading the 1 days to expire or the 0 days to expire. Can you please, someone posted this question for options. Are you buying the ask or selling into the bid? Normally I'm buying the ask, and on a rally, like if I join, right, if it's down here and I slap the ask because the spread is tight, if it rallies up, I'm joining the ask along the way, scalping, right, because if it does want to continue, then I'll leave a portion of my position. But as it's rallying, I'm joining the ask, right, selling. But if I don't get filled on the ask, I will sell in the bid. How late in the day will you take an option play? Trying to prevent getting stuck holding a play overnight. I never hold a play overnight. Never. Not trading QQQ for me, because I'm trading 0 DTEs or 1 days to expire. The theta is really not that great. And you know, I like coming into the day with a fresh kind of mindset, right? That's how I walk away profitable each day. I mean, you know, making $3,000 before an hour, or I mean, an hour after open. I mean, you know, where else are you going to do that? You know, I mean, yeah, if you have the large, you know, large enough size of your account, trading small caps, and you risk, you know, maybe 40 grand for a 10% move or something, you know, or something like that, right? I'm using half the amount of capital that I was using in small caps and making way more because of the percentage gains that we're making on these contracts and the way that these contracts move. It's very simple. I've just applied everything from small caps, transferred it over to large caps. The only thing that's different is the order entry. Okay, finding which contracts that you're going to trade, plotting them out. Normally I have you know, a watch list like that, so I can flip through them rather quickly and execute. Knowing that you have switched over and QQQ has been so well for you, what do you think will be dabbling? Do you think you will be dabbling in longer term options? I know Rhodes prefers to go longer out, or at least suggests for noobs to take further out time frames. Yeah, I mean, you know, we're gonna get into swinging and everything. I think that it's a great kind of point for a possible reversal, just because, you know, if we look at QQQ on the daily, it does give us an area to base risk off of. Okay, so we have this low here. Let me just remove this. We have this low here, tweezer bottom here, as well as this kind of demand. So this gives you an area, right? I would be looking at some swings, you know, probably on the Qs a little bit further out of an expiration, or, you know, expiration date, maybe some monthlies or something like that. All right. Yeah, if you guys have any more questions, I'll take a few more, and then we'll wrap this up. Okay, I do have a few things that I have to prepare in the chart review tonight in the Patreon, as well as getting everyone ready in the morning, right? Just getting some plans. I'm going to set some alerts on NQ. They might get blown out before market opens tomorrow, but you know, just making sure that everyone is on the same page. That's the whole point, right? Yes, I could have a watch list out. I could put an inside bar watch list out and leave everyone to it. You know, like, hey, fend for yourself. Here's the call outs. You guys make it right. But trading QQQ together, right? You guys saw that this plan from this morning. Okay, you guys saw the plan. Oh, okay, you guys saw the plan from this morning, right? Everyone was able to follow along to that. Okay, alongside my commentary going through, hey, if this breaks, I'm going to say, hey, I'm probably taking puts, or this, I try to type in chat as much as I can for those who are not viewing, and I'm trying to get better at it, and I've done pretty well so far, but a lot of the calls are going to be made on stream. If you have a question about it, I will answer you during the stream. But if everyone can follow along on the same ticker and have the same kind of mindset and thesis, we're going to bank together. Okay, because what happened? Trendline break, we take puts. We took the calls down here in this area, took calls right here on this support right there, on this ascending trend line. Remember? Right, we took them right there. They went 200+%. Imagine if you hold the bottom, or you just hold one contract. Let's look at that. Right, what did I say? What did that thing say? 381. Let's just say you take 381. Oh, damn. Right, I mean, this is the power of options right here, guys. I mean, it's absolutely... This is why I'm not touching any small caps. Right, 381 calls. Let's say you take them. Big push down off of open. Is this the same? Yeah, it is. Okay, so big push down off of open. What if you bottom tick on this tweezer top? Maybe you get a little bit higher here. Maybe a 218 average. From the very top to the day, 200%. Okay. Why did these... I swear that these would have moved a little bit differently. Even the 382s. Why did the 385s move like that? Interesting. I don't know. Do you use an option flow scanner to help follow some bigger money? And if so, which one? I use Hero Flow. I don't use it too often, especially not intraday. Intraday, it kind of gives you too much noise, and it's really kind of useless. Really, what you need to be focusing on is this price action. Everything that you're going to need to be profitable is going to be presented right here in this price action. Okay. Yeah, happy birthday, Primos. Okay, so that's pretty much going to wrap it up for me, right? If you guys enjoyed this session, I hope that you guys took notes. I hope that you learned something, okay? Right here, this is the last cap. This is at 300 members right here. There's 27 spots remaining. And this is the last call, okay? Final call this month. So, yep, Hero Flow. Yep, Hero Flow is very good. So, if you guys do have any questions about the Discord or the Patreon, please feel free to DM me. And as well as those in the Patreon, this will be the last one, right? After all the requests and everything, I just had to do one more. And after that, right, we'll just stick in the Discord tomorrow. I'll catch you guys 8 a.m. in the morning in the Patreon for the pre-market prep, as well as a live session tomorrow at around the same time, around 9 p.m. So that we're all on the same page. And that'll, if I can get the YouTube link working, right, the live session, I'll send out the private links. And you guys should be able to watch that there with the better quality, because that Discord quality is so bad. So the price after December will be $90. Yep. We've had the group open for 4 months now, and there's a ton of content that I've recorded. I put so much time and effort into this Discord group because I want people to be able to be profitable and understand the mistakes that they're making and how easily preventable those mistakes are. Because a lot of the time, it's just user error, right? It's just taking puts on something where smarter money's taking calls, okay? Just like the plan, if it shoves down, I'm looking for it to reverse. If it shoves up, I'm looking for it to reverse. Now, that's not always, because once I get enough data and this trend starts to develop, then we can have a clear thesis. Obviously, this trend was bullish. Higher low, higher low, higher low, higher low. What does that tell you? It's bullish until these higher lows break. Why can't I swim? I don't know, man. I mean, I had to join my fucking high school swim team to learn how to swim, dude. yeah, so if you guys enjoyed this, I hope that you learned something. I hope that this helps you in your trading session throughout the rest of the week. Thank you everyone for tuning in, and you guys have a good night. Okay, I'll catch everyone in the Patreon tomorrow, 8 a.m. in the Discord, as well as a live session tomorrow night at 9 o'clock. So you guys take it easy and have a good night.